The 2008 financial crisis was undoubtedly one of the biggest financial disasters of our time, but you might not really understand sort of why it happened and what were the consequences of it. So if that's you, then you are in the right place, because in this video I'm going to briefly explain it to you. So let's get straight into it. So before 2008 there were real low interest rates because of the 9/11 and the dot-com bubble. So that means that the economy was growing, the economy was booming, and also houses were seen as a really safe investment with not much risk attached to it. But then what ended up happening is that the banks began giving loans, mortgages, to buy houses for literally everyone, even if they had a poor credit, because the house was seen a very safe investment, and even if the guy couldn't pay, then the bank would get the house, and it's not that big of a deal. And the banks also started selling mortgage-based securities, MBSs, and they were said to be a safe investment, but that wasn't really true, and they were quite risky. And a lot of investors ended up buying it. So housing prices peaked at 2007, and that was when the price of one house was at the highest, and then literally collapsed. And the price of this MBS, mortgage-based security, has also collapsed, and a lot of people had lost a lot of money with that, mainly banks. So a lot of banks ran out of business with this as well. The biggest one being the Lehman Brothers in 2008, September of 2008, they also ran out of business, and that also triggered a lot of panic among the investors. And then credit markets froze, the banks stopped lending to each other, the stock market crashed, and countries like Greece, for example, had a really hard time, and their economy just literally collapsed after this 2008 financial crisis. So what ended up happening is a lot of central banks started printing a lot of money and injecting it to the system, and they also started helping a few failed banks to get them back to business. Fortunately, this lot of new money, the system didn't really ended up resulting in that high inflation, so this was a good move. And so just to recap, the 2008 financial crisis was mainly because the banks ended up giving mortgages to people with low credit scores, and this was a really dangerous thing. And after 2008, houses weren't seen like so safe investments. And thank you very much for watching this video. I have a financial course, Wealth Club, and it's also a community. You can join through the link in the description. If you care about finance, you will really enjoy it. And thank you very much for watching this video.